Welcome to AI Explains ICT. In this video, we are diving deep into some foundational stuff. We're talking core content, month 3, episode 1. And we're going to get into one of the biggest questions in trading. How do you build a trading model that's not just some copy-paste job, but something that is uniquely and powerfully yours? Let's get into it. So, ICT kicks things off with this one core idea that, honestly, changes everything. A successful trading model isn't something you can just download or copy from someone else. It has to be a direct extension of who you are, your personality, your psychology, and just the reality of your life. It's not about trying to become ICT, it's about discovering the trader that's already in there. Your strategy really starts right here. These questions, these are the real building blocks. I mean, think about it. If you're a super patient person who likes to make a decision and stick with it for the long haul, a long-term position model might be perfect for you. But if that sounds like torture and you need that faster feedback, you're probably built for shorter time frames. The key is your psychological makeup has to match your trading style, or you're always going to be fighting yourself. And look, this isn't just some abstract feel-good idea. Finding your trading identity is the practical, foundational first step. Without this self-awareness, you're just going to constantly be second-guessing, and that's a battle you just can't win in the markets. This quote right here gets to the absolute heart of the mentorship. The whole point isn't to create an army of little ICT clones. It's to give you a framework so that one day, as ICT puts it, you have this epiphany, that aha moment where all these concepts suddenly just click into place, and you start seeing the market through your own eyes with a model that feels like a second skin. Okay, so you've looked in the mirror, you've done some self-reflection. Now what? Well, the next step is to choose your battlefield. This is where we take all that self-knowledge and turn it into a real, practical decision about which time frame you're actually going to operate on. This is where your trading identity finally meets the market. This table is so important because it connects who you are with where you should be trading. That monthly chart, that's for the trader who thinks in years, not hours. The person who can plant a tree and wait patiently for the fruit. As you move down to the weekly and daily, you get more and more setups, but you also get a lot more noise. You have to be really honest with yourself and figure out where your psychological sweet spot is. Now, this is a really powerful statement from ICT. Even though he's a master at day trading, he actually recommends starting with the daily chart. And why is that? Well, because it gives you the best of both worlds. You get that high time frame perspective, you see the big institutional levels, but you still get plenty of setups to analyze and trade, without all the crazy noise you find on the intraday charts. All right, now we get to one of the most powerful concepts in this entire module. It's this idea of using the monthly chart to plant a single, high-probability seed. And look, this isn't about actually taking trades on the monthly. It's about finding one core idea that is going to guide every single decision you make on those lower time frames. Think about it this way. When you look at an apple seed, you're not just seeing a little brown thing, right? You're seeing the potential for a whole tree with branches, leaves, and eventually hundreds of apples. It's the same thing with a key level on the monthly chart. It's not just a line. It's the beginning of a major directional move that's driven by smart money. And that one seed, that one high time frame idea, it literally contains the blueprint for an entire orchard of trades on the weekly and daily charts. It tells you which way the wind is blowing. It tells you if you should be looking for buys or sells. And once you have that direction, finding setups becomes so much easier. Okay, let's make this real. We're looking at a Euro/USD monthly chart. Price makes this huge, massive move down. Our eyes, trained by ICT, we immediately go to where that move started. And we see it, this last up candle right before the huge drop. That is a monthly bearish order block. It's a level where we can assume smart money sold aggressively. So we mark that level out, and then we wait. And I mean, we really wait. This is the part that tests your soul as a trader. It took over a year, 13 months to be exact, for the price to finally make its way back to that institutional level. This is the kind of patience that filters out like 99% of traders. But for those who are watching, the trap is being set. So price finally touches our level. The big question is, where's it likely going to go next? We look down the chart, and what do we see? These relatively equal lows down here. The bodies of the candles are almost perfectly aligned. It looks, well, too clean. ICT teaches us that below lows like this, there's a giant pool of liquidity, sell stops from big, long-term funds. That becomes our target. And here's what happened. The moment price hit that institutional sell level, it rejected hard. Over the next 6 months, it just cascaded downward, a move of more than 2,900 pips, heading straight for that pool of liquidity we identified. It took half the time to play out as it took to set up. Now that is the power of planting a high timeframe seed. So we had our seed, right? That was our monthly bearish bias. Now it's time to harvest the orchard. We're going to drop down to the daily chart and see how that one single high timeframe idea created tons of specific, actionable trade entries. This is where the theory turns into a potential paycheck. So check this out. We're on the daily chart now, and this is all happening inside that big monthly down move we just saw. We can see multiple examples of what ICT calls a turtle soup. The market creates a little short-term high, traders put their buy stops just above it, and then the algorithm runs price just high enough to trip those stops before selling off aggressively. Every single one of these was an entry signal, and it was perfectly aligned with our monthly bias. And that one bearish idea from the monthly chart, it gave birth to a whole orchard of opportunities. We saw stop runs or turtle soups hunting that liquidity. We saw bearish breakers, where price came back to retest old support as new resistance. We saw smaller bearish order blocks forming on the daily chart. And we saw multiple optimal trade entries, those deep Fibonacci pullbacks. The market gave you chance after chance after chance to get on board with a big move. Now, I know what you might be thinking. Breakers, order blocks, turtle soup. It can feel like a lot. It can be a bit overwhelming. But here's the secret. ICT himself boils his entire execution model down to just 3 core repeatable patterns. Simplicity really is the ultimate sophistication. Here they are. This is the essence of it all. Number 1, stop runs, or turtle soups, basically false breakouts. Number 2, order blocks, waiting for price to return to a key institutional candle. And number 3, range trading, looking for price to pull back into a liquidity void or a gap. That's it. You don't need to master all 3. You just need to find the one that resonates with you, the one you see most clearly. And this right here is the final takeaway, and it's so important. Your job isn't to learn every single concept perfectly. It's to find that one pattern that just clicks with your personality and the way you see the market. If you can see stop runs clearly but order blocks kind of confuse you, then forget the order blocks for now. Become the best stop run trader you can possibly be. Master your one thing. That is the path. And that brings us to the final question I want to leave you with. Next time you open your charts, which of these 3 core patterns just jumps off the screen at you? Is it the sharp reversal after a stop run, the patient return to an order block, or the smooth filling of liquidity void? Your answer to that question, well, that's the first clue to discovering the trader in the mirror. Hey, if you found this video valuable, do me a favor and hit that like button, and make sure you subscribe to the channel for more deep dives into ICT's concepts. And seriously, if you have any questions, drop them in the comments below. We read every single one, and a real human will get back to you. Until next time, safe trading.